What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video, we're going to be going over what I believe to be the best trading style in order to grow a small account. Now, I'm sure it's a lot of you guys in my position, so stay plugged in, man. This is going to be a good one. So we all know when it comes to growing a small trading account, right? It is a struggle. Like, your goal is to grow a small trading account, maybe it's $100, $500, $1,000, right? And grow it into a six-figure or multiple six-figure account that would allow you to quit your day job, right? Have the financial freedom you want, right? And just take back control of your life. So when it comes to growing a small trading account, our goal has to be two things. Make as much money as possible while risking the least amount of money as possible. So the only way I know how to do that is through scalping. Now, scalping is a trading style where you're holding your trades anywhere from a couple of minutes to the latest a couple of hours, right? And you are staying on a smaller time frame. Maybe it's the 1 minute, the 3 minute, the 5 minute, sometimes the 15 minute. Like, I really call like the 15 minute, an intraday trading time frame, but I know some people that say using the 15 minute is scalping. I don't count it, right? I say the 5 minute, the 3 minute, and the 1 minute. Now, why is scalping so valuable to people with a smaller account? Well, I could just tell you, or I can show you. So those of you who've been following my channel for a little bit, you guys already know that supply and demand is one of my main strategies that I use, right? I also trade ICT's 2022 model, some support and resistance, as well as some other things. But, supply and demand, and I would say ICT's 2022 model are probably like my top two strategies that I use on a daily basis. So let's start off with supply and demand. This is a trade that I actually took this morning in London session on GU. So looking at this setup, right, we've been pushing up for a while. We got, if I were to go to a higher time frame real quick, if this thing would catch up with me, we can see that we've been pushing up, for days on end. So we've been in a steady uptrend, honestly, since the beginning of November. So there's a lot of imbalances to fill, as we can see on the higher time frame. Like, it's very obvious imbalance here. We got a couple of smaller imbalances all throughout this price action here. So what I was seeing this morning was we've been in an uptrend, and all of a sudden we get a market structure shift where we break a low. So I was looking at this supply zone right here that I already got marked up. I was looking at this supply zone to hold, right? Especially that we're at yesterday's high as well. That was also another confluence that we came back into yesterday's range of price. I seen we have a supply here, break a structure, gap attached to our zone. I was like, okay, this zone can hold. Now, pay attention to the risk and pay attention to the reward. I was risking 4.5 pips to make 9 pips. Now, when it comes to scalping, or I should say the beautiful thing about scalping is that since you're on a smaller time frame, your stop losses, depending on the strategy you use, are automatically going to be smaller, which means you can go heavier on the lot size, right? So let's just say you have a $100 account, and let's just say you're using a mini lot, which is a 0.1, okay? That means you're making $1 per pip. All you had to do was risk $4 on this trade to make $9, right? So you essentially made 9% in one trade. Now, I know there's gonna be some people, man, that's 4% of the account. You shouldn't be risking that much. You're risking more than 1 to 2%. What are you doing? Like, bro, can we as a trading community please come to an agreement that the 1 to 2% rule is so played out, bro? Like, I talked about making a video about this before. I'm gonna make a video about it for sure, because I feel like that 1 to 2% rule is so outdated, and it's so out of touch with what people are really doing in these markets. Like, it sounds good, but I'm gonna have to save it for another video. But you could have risked $4 on this trade to make $9, right? Or if you had a $500 account, let's just say you want to risk a little bit more. Maybe you want to risk $20 to make $40, right? So you could risk a small percentage of your account, a small dollar amount of your account, right? And make, great percentage gains on your account through scalping, right? This is a 4 pip stop loss. The most you would have lost is $4. and you could have made, $9 on this trade. Don't even get me started on if you're twin trading, right? The most you could have lost was $9, and the most you could have made is $18. So this is just one way where scalping could help you grow your small account exponentially, simply because the amount you're risking is so small. Now, I know you guys don't believe me after one example. Let me show you another example using ICT's 2022 model. So for the next example, we're going to be using ICT's 2022 model. And the reason why I'm showing you guys all these different strategies or all these different concepts for scalping is because I want to show you guys the power of scalping. I want to show you guys that it doesn't matter what concept you trade, right? If you use it on a lower time frame, you can still have a lower risk with a big reward. So looking at ICT's 2022 model, for those of you that don't know, what is it? Well, the 3 steps are this, right? Sweep of liquidity, market structure shift, fair value gap entry. Okay, I'm gonna break it all down right now. So first things first, sweep of liquidity. If you don't understand liquidity, guys, I have a video on it on my channel. But as we can see here clearly, we swept Friday's high. So that's one sweep of liquidity, but also we look further to the left, we can see that we swept Wednesday's high as well. So that's just even more confluence. We took a lot of liquidity. Now, what is the next step? After we take liquidity, we want to see a market structure shift. For those of you that don't know what a market structure shift is, it is when we are in a uptrend, right? Let's say this is an uptrend or a downtrend, but for this example, we're going to do an uptrend, right? We're in an uptrend. So in an uptrend, we're supposed to be making higher highs, higher lows, right? But a market structure shift happens when all of a sudden we end up breaking a low. So there's no reason for us to be breaking lows if we are in an uptrend. If we break a low while we are in an uptrend, that could signal that price is ready to reverse. So when the MSS happens, the idea behind it is, price is going to come back up somewhere in this area, and maybe there's an order block or a fair value gap or, supply zone up there that is going to mitigate and then drop back down and start a new trend. So where do we get that MSS? Well, the first one is right here. Now, I know a lot of you guys, if you're like me, you probably wouldn't have counted that, or you probably wouldn't have been as confident to count that as an MSS. But this surely, if you didn't count that one, this surely right here was an MSS. So we end up breaking a low. Now, what is the last and final step? Is there a fair value gap before or through that low? Yes, there is. Now, for those of you guys that don't know what a fair value gap is, I'm gonna always give, a quick little rundown of what something is as I'm teaching, because I don't want to assume you guys know what I'm talking about. So when it comes to fair value gaps, guys, we have to understand that it is a 3 candle sequence. So for a bullish example, right, let me go ahead and draw it out. For a bullish example, it is when the high of the first candle, so this is candle 1, candle 2, and then candle 3. So when the high of the first candle and the low of the third candle do not overlap or touch, that is what we call a fair value gap. Okay, that is for a bullish example. A bearish example is the flip side. It is when the low of the first candle and the high of the third candle do not overlap or touch. So in this example I have here, before I break this setup down, we can see that our 3 candle sequence is candle 1, candle 2, candle 3. So we can see that the low of the first candle and the high of the third candle do not overlap or touch. So that is our fair value gap. Now that we understand that, let's get into this setup. So like I said, sweep of liquidity, I already marked out what the sweep of liquidity was, right? Then we want an MSS. The real MSS happened up here, but if you were hesitant or if you want to be more conservative, you could call this low right here your MSS as well. Now the final step is, where is the fair value gap? As we can see here, the fair value gap is clearly right here. You will set your entry up right at the opening of that fair value gap. And where would your stop loss go? Your stop loss could go 1 or 2 places, or 1 or 3 places. Above the fair value gap candle itself, above the whole 3 candle sequence, or above that high, right? Above that swing high. Now, me personally, I'm either gonna have it above the fair value gap candle itself or above the 3 candle sequence, because in my back testing, if it breaks the 3 candle sequence, more than likely it's not going to hold. But that's just my opinion. Now, where would your targets be after you enter this trade? Your targets would be opposing liquidity. So that would be areas like this low, right? Or maybe you're targeting, Asian session low, or you could even be targeting, Friday's PM session low way over here. Now, let's just go with that first target that I was talking about. If you would have went for this first target, targeting this liquidity sitting over here, that would have gave you a 1 to 2.5 risk reward. You would have been risking 8 pips to make 20 pips. Do you guys see what I'm talking about? Like, you would have been risking 8 pips to make 20 pips. Now, let's say you left a runner, right? Let's say you left a runner because you're confident this thing is going to drop. Well, if you would have left it to the second TP, you would have been risking that 8 pips to make 51 pips. Now, let's say you held it all the way to TP3, right? You would have been risking 8 pips to make 57 pips, right? And if you would have held a runner all the way through, obviously, you could have made a whole lot more because this thing melted after tapping that fair value gap. And so all I'm trying to show you guys is this. When it comes to wanting to grow your small account, you have to be smart. And scalping, I believe, is the best way to do that, right? Scalping allows you to risk the least amount of money as possible to make a bigger gain, right? Especially, I didn't even show you guys indices. Like, don't even get me started on indices. Like, in my back testing, I found that when it comes to supply and demand, ICT's 2022 model, if you trade it, especially in London session, right, your typical stop loss is anywhere between 10 points and 20 points, right, for NAS and US 30. And when it comes to SPX, it's anywhere between 2 points and 5 points. So scalping really allows you to risk the smallest amount possible in order to make the biggest gain. Now, as always, guys, I don't want you guys to just do things because I said it. I want you guys to go and back test, finding these setups, right? Go and learn ICT's 2022 model. Go watch some of my videos on supply and demand and, back test these concepts, back test, your stop losses and your take profits for yourself. Like, I didn't even say this for this GU setup. When it comes to supply and demand, for me, when I enter right at the zone, and I'm always targeting. For supply setups, I'm targeting the recent low, and for demand setups, I'm targeting the recent high, whatever that may be. So I want you guys to go back test this for yourself and figure out if this is something that makes sense to you. It makes a lot of sense to me, but don't take my word for it. Do your own research. I hope this video helps you guys out. I hope it gives you guys a whole lot more clarity on what you need to do in order to grow your small account. As always, if there's any questions, comment them down below. I typically reply to every single comment, but that's all I got for this video, man. I'm gonna catch you guys in the next one. I'm gone.